But just go back to the pounds and pence in people's pockets, if you like. Let's go back to you, Nick Mendes. Jasmine Birtles there said about 2.2 million households are on variable mortgages in this country. There are about 27 million UK households, so it's less than 1 in 10. It strikes me that there are far fewer people with mortgages than there were 10, 15 years ago. More households now are in homes that are owned outright. They're often much older people. Younger people are finding it difficult to buy homes, of course. But because there are fewer mortgage holders in the UK these days, and fewer of them are on variable rates than they used to be, the Bank of England's ability to control spending through the mortgage market is now much less than it used to be.
Absolutely. I think when we take into account habits as well, most people, if you look back over the last few years, more and more people are taking out fixed rates for stability. Yeah. So when you have interest rate rises, we don't see the same effect that it does in pounds and pence of what you see on a daily, coming out on the mortgage payment each month. And when we take into account, as an example, the rate increase, what it actually means in pounds and pence for clients is that a typical tracker monthly repayment will in fact go up around by £10 a month. And a variable, if you're on your standard variable rate, this rate increase will typically increase your monthly repayments by £10. So you're not going to see a huge change, so to speak, when it comes to the outgoings. But what we are seeing is about trends and habits. And what is interesting is when lenders are taking into account further borrowing, we're starting to see long-term fixed rates. And in a way, and it'll be interesting to see the demands that clients have to really counteract potential rate rises. I think everyone's focused on, is this the start and how high will it go over the course of the mortgage lifespan?